Okay, so I think that's probably most people then who are going to join. So we will make a start. So thanks everyone for joining this. This is obviously the first session of the tax lab that we're doing, so I'm expecting some potential hiccups along the way. Hopefully not though, but we will see. So do bear with. I'm sure the future sessions of this will be better than this one since this is the first one. So essentially the main bulk of today, what we're going to do is I've been sent a scenario, a situation that one of you has actually got in real life. So it's a part of some draft advice. And what I'm going to go through is I'm going to go through that and give my kind of live feedback and thoughts around it and how things can be changed, how it can be improved, what's good, etc., etc. So I will just share that so that we can all see it and look at it together. So just before I move on, can everyone actually see that Word document that I've just got on the screen now? Yeah, perfect. And hopefully it's big enough as well. I've got it kind of as big as I can have it really on the screen. But if it is too small, do let me know. Right. So this is a summary of the situation that the attendee has sent over to me. So we have a partnership, a husband and wife partnership, and they have, I think it's 2 units. I wasn't actually sure that it's 2 or 3 units, but they've got at least 2 units. One that's a non-trade unit, and one is used in a garage, which I'm presuming is like a car garage, something similar to that. I don't think it really matters for the purpose of this, so some of these clarifications don't really matter. So we've got the husband and wife that are basically wanting to retire or to make the business smaller. So they just want to have the guy and no staff in the business anymore. It's been trading since 1998. Um, they brought these units from the landlord back in 2012, so that's quite a while ago now, 13 years, and there was a mortgage attached to it. They opted to tax the units for VAT at the time, and the units are owned by the husband, not the partnership. So a personal owning of the assets, it's not owned by the partnership. Okay, so that's the main bits. And whilst kind of the point of focusing on tax advice isn't for me to focus on the technical bit behind the tax advice. What I want to mainly focus on is like how the advice is written, how it's presented to the client, and how easy or difficult it's going to be for them to understand. Because being technical is an essential element of tax advice being good, and that's what all of us, or at least at some point, will become good at. But I think the thing that's more tricky is then taking that technical and turning it into something that's really client friendly. My alarm just went off at the wrong time. I meant to set it for 30 minutes after I started in case I was rambling for too long. So I'm just going to quickly reset that. So I don't want to really be doing this bit for more than 30 minutes. I think it'll be too long otherwise. Lovely. So let's make a start then. So what they've said as well, so this is what the person who sent me this has said. There's a bit that's highlighted in yellow below, and they're not 100% sure about this bit. So I will talk about that a little bit as well. Um, they have given me basically a snippet of some of the options from the report. So they haven't given me all the options, but they've just said that they've considered a few different ones, which are that the husband and wife, the partnership, continue as they are now. A different scenario that they just sell the non-trade unit, an option where they sell both units, which is the one that we've got below, and there's another one where they rent out units to third parties. So the one that we've got to look through in a bit of detail here is this. And as I say, the main thing I want to be commenting on is like how good the advice is rather than the technical that's sitting behind the advice. I mean, for one, this isn't actually my area of tax. So I can't really comment that much on the technical because all I do know is what I remember from CTA, which at this point is very little about this. Okay, so they've started off by saying that to support the client, so to support them with their decision making, we've listed the typical benefits and challenges of this option below. So this is the option where they're selling both units. If you choose to take this approach, you're likely to see the following benefit. So I had a little look at this before this chat, before this session, just so I could get a bit of a few thoughts together. So what's about to follow here, I think is really good. I actually really like it. And I really like it because it starts off by not focusing purely on the tax. If the partnership does anything at all in relation to these garages, in relation to these units, then there is going to be tax implications. Of course, there is. If they sell them, there's going to be implications. If they keep them, there's going to be implications, so on and so forth. But that is almost like a side consequence for a lot of people or part of the overall consideration and not the full consideration. So I like the fact that they've thought about this because they're showing that they're thinking about the overall effects of doing something on this client as well as the tax bit. Obviously, the tax bit where they can add the most value in this case because that's what they're a specialist at. But nonetheless, they're considering both, which I really like. So, what they've started off by saying then is you're likely to see the following benefits. They said capital release. So, selling both units may provide a significant injection of funds, which could be used to reduce liabilities, reinvest into the business, or support personal retirement goals. Okay, so just before I move on to any further bit here, I just want to highlight the word may for just a second. So, this gives the impression that it might be or might not be something. So, I imagine they've used the word may here to attach to the word significant because they don't know how much money that these units could sell for. I think what would be better at this point is if they had an idea of how much these units could sell for, therefore they could put a number in instead and don't have to rely on adjectives like significant. So if they could say something like selling both units would result in receiving roughly £500,000 of cash, that is a much better statement than what is here now because it's more specific to the actual client's real circumstances and what would happen should they sell it. Now, if they don't have an idea what the price is, they could estimate it for now and say, based on an estimated price or something like that. And that would make this just a little bit better than what it is right now. Might seem like a picky point, but it's something that I noticed. So I just wanted to make sure that I commented on it. And then we can also remove the word may then. So it should always be definitive where possible. And that is like, well, it's not definitive, is it may? It may be, it may not be. So we can get rid of that word then. Operational simplification. Relocating to a smaller premises and disposing of surplus property reduces your ongoing property management and annual responsibilities. Okay, fine. Nothing really to comment on that, but a good non-tax point to note. Flexibility enables you to scale the business to a level that suits your current lifestyle or future plans with fewer overheads and reduced risk. Okay, yeah, potential challenges then. So they've talked about the benefits now of this option from a non-tax standpoint, and now here are some of the potential challenges. And so what they've noted is that there'll be a lot of rental income. So I believe one of the units is currently being rented out. So they've said that the sale of the neighbouring unit will result in the cessation of rental income, reducing overall cash flow, which is true. So they're essentially swapping rental income for a huge capital contribution or capital amount of money right now. So in the short term, obviously it'll be better, but long term, maybe not. Reduction in asset base. You may reduce the long-term capital appreciation potential by disposing of commercial property that could otherwise be retained for investment purposes only. Yeah. So obviously the word may here is fine because you don't know whether something's going to go up or down in value. But they're the right. There's a reduction in asset base. I mean, I potentially might remove that one just because it's so uncertain whether it's a positive or a challenge. It could be seen as either way. Market time and risk. If property values are currently low, the sale might not achieve optimal value. Yeah, that's true. Obviously, always a risk when something's being sold. Disruption, and I think this is probably the biggest challenge. So I'd probably move this one to the top out of the potential challenges. So it's a disruption. Transitioning the trade to a smaller premises may require some business restructuring or downsizing of the operations. So I believe what they're doing is they're going to sell. They might sell both units, but because they want to continue trading afterwards, they would then rent or move to a smaller premises. I'd probably just elaborate on this one a little bit because moving premises is going to mean that clients that know that you're at a specific location there, they might not know where you move to. So that could have a knock-on effect to losing clients as well, or making it confusing for clients. That's another bit of disruption. I would probably move that one right to the top personally. I feel like it's the biggest one out the few there. So whenever we have a list of something, I would always aim to have the point that's probably going to be the biggest or the most important to the client first, and then have the other ones to follow. It's somewhat subjective, obviously, what's the most important and what isn't. But by doing that anyway, you'll be closer to what's the right order, let's say. So it also says the second non-business commercial unit. So this is quite complicated word in here, by the way. I do wonder if there's a way for them to simplify this. Have these units got names, for example? Is it unit one and unit two, or unit car or and unit rental? Just something to simplify this word in a bit because there's I'll come on to it more in a bit, but there's quite a lot of jargon that follows in some of the later sections, which is going to make it difficult for the client to understand, which can be addressed separately. But because tax advice is inherently going to have something complicated in it. Anything to simplify is going to help here. And also then it's more specific and clear which one's been spoken about. So I'm thinking this is not the garage. I'm thinking this is the rental unit. So maybe even the second, the rental unit is sufficient to refer to it. So I've said the second non-business commercial unit would remain as per option B, and we will therefore only cover the implications of the garage unit. Okay, so they're just saying that there's a separate option where they can go refer to get information about that. So that's fine. It saves duplication of wording in this section, which means the overall piece of advice will be smaller, which is always better. It then says it has also been assumed that the business would continue, albeit from a smaller unit operated solely by client, which by this I assume this is the husband, the guy of the partnership, rather than the wife. So again, I'd potentially put their name in, but I think actually they have just taken their name out of this so that it was anonymized for the purposes of this session. So that's okay. Should this not be the case, please kindly let us know and we will adjust our advice accordingly. Okay, so this is a good point to have in here because they've made assumptions and they're letting the client know that basically if these assumptions are wrong, we need to reconsider this. What they could do as an alternative here, though, is they could potentially speak to the client by phone or send them an email or something like that. Because what's happened here is they've drafted a lot of advice based on assumption that could end up being wrong. So if they haven't already checked this with the client, then they should in the real world, I would say, check it because it's going to stop them doing work that ends up becoming reworked later on, which is obviously a lot of time investment that isn't necessary, essentially. Okay, let's look at the next bit then. So we're starting to actually get to the tax bit now. So first off, it says income tax implications. So this is just going to be talking about income tax then, which is good. So what it says is, as no taxable income arises directly from the sale of the garage unit, being a capital disposal rather than trading income, there are no direct income tax implications. Okay, so I'm just going to pause for a second on this whole sentence because I think it's quite a complicated sentence that could be simplified for the client's benefit without losing its meaning. So I don't really know what the purpose of the word directly is here. Like, what is that adding to this sentence? Because I think you could probably just say, no income, no taxable income will arise from the sale of the garage unit. And we can drop the word directly. It might seem a small thing, but I don't really know what to say, which is making me think, is there a meaning behind it? Is there not? But I'm not sure based on the current wording. But the most complicated bit, I think, is this here. Being a capital disposal rather than trading income. Will a lay client really know what we're talking about here? Maybe they do. I don't know this client, obviously, so maybe this is fine for this client. But I think we can simplify it and it'll be more appropriate for more clients then as well as this one. I just think that can be dropped entirely. I don't think they need to know that it's a capital disposal rather than trading income. The fact is that they know that there's no taxable income on the sale of the garage unit is enough for me. So they can cut out the rest of it and it would still say the same thing in a much nicer way for the clients. And also, it's the same point. I don't really know what they mean by direct income tax implications. I'd probably get rid of that. Unless there obviously is a reason behind it, in which case I'd probably make it more clear what is meant by that. And it says, however, any revenue generated from the continuing trade in the new premises will remain subject to income tax. Okay, that's fine. That makes sense. Although you'd like to think since it's the same situation that they have now, that they would know that already. Um, and just as a knock-on effect for this, because they have been so thorough in like talking about the different income tax things here, I just thought, well, is it worth just commenting then? So again, not my area, so I could be wrong on the tax on this, but will the rent reduce taxable profits and therefore reduce the IT payable? Because since they're commenting so much on like all the different income tax and what you'll see in a bit as well, capital gains tax, it almost feels like an omission to not say this. So I'd either go for simple and only the points that are not obvious to the client, or be completely thorough, because that seems like an extra point that can add something there. Because right now they own, I'm presuming they own them. Well, they do own them, but I'm presuming that the mortgage has been paid off. And even if not anyway, I'm sure the income tax will be a net positive here, in terms of less being paid. Do feel free, by the way, to add your comments and questions throughout, and I'll circle back to them at the end. So let's move on to the next bit then, the capital gains tax implications bit. So it says the sale of the garage unit will be treated as a capital disposal for income tax for tax purposes. Okay, So again, same comment as before, really. This is quite complicated as it's written right now. Use of the word capital disposal, that is jargon, I would say, personally. Now, is what we can say just something as simple as the sale of the garage unit will be subject to capital gains tax, or capital gains tax will be due on the sale of the garage unit? That is saying, well, as long as I'm not missing something, 'cause it's not my area of tax. But to me, that's saying the same thing in a much more client-friendly way than what's currently being said. So what's being said, I believe to be right, based on what I know about the technical here, but more complicated than it needs to be for the client. Then it says, provided the transaction is with an unconnected third party, the disposal proceeds will be taken as the actual sale price. So you can see all the bits I've highlighted here are all the bits that I think are basically more complicated than they need to be, and I'll be looking to remove the use of these words and terms entirely from this document to make it much more easy for the client to understand. So transaction is a more complicated word here than I think we need. Can we not just say the sale, or something like as long as the garage is sold to an unconnected third party? But then even we've still got the jargon there, unconnected third party. Do we need to use that or not? Can we, for example, give some examples of what would be an unconnected third party here to help them understand what that is? So I'm guessing it's going to be something like if they're family or close friends, or they live with them or something along those lines, they'll be connected. So it could say something like provided the garage is sold to someone that isn't family, isn't friends, so on, so on. Could that be said instead? Because that would be significantly simpler than what is currently said. And if there is a really big list of what is and what isn't connected here for the purposes of capital gains tax here, then you could always list a few of them and say, but there's more. And if at the time you're coming to sell this, we can comment on this for you. Because what you probably wouldn't want a client to do is figure out for themselves anyway who is and isn't an unconnected third party. That's going to be a complicated thing to do. And we can do that for them as the advisor here. So anyway, let's carry on. It says, provided the transaction is with an unconnected third party, the disposal proceeds will be taken as the actual sales price. Okay, so what is meant here by disposal proceeds and actual sales price? I'm guessing this is the amount of money that they will receive in total for it. So can we say something more simple there, or at least explain what it means to the client? What is meant by actual sales price as well? So could we add in an example here? Could we say something like, if the garage sold for £500,000 to an unconnected third party, this is what it means? Because right now we're explaining it so that they can almost be like flexible and apply it to different circumstances. But what we could do is just apply it straight to their circumstances for them. And then this would be more tailored then to the client specific circumstance. You'll see we continue with some of the complicated bits here. So it says the capital gain will be calculated based on the sale proceeds less the original base cost of the property. Now, I did CTA and I could not tell you exactly what that means either. So there's very little chance of a client understanding what that means. So I think this whole paragraph could be made into something significantly simpler. Could it say something to the effect of selling the garage will result in capital gains tax being due? The amount due will depend on if it's sold to a connected or unconnected third party, and it will be based on the actual sales price and multiple other factors, which we can advise on at the point you're selling this. Or can they put in an example now saying something like, for example, based on this happening, this is the capital gains tax that will be due? Something like that. So it can be brought more into the client's words. So I'm doing this off the cuff, and it would be better if I was to sit down and write it. But hopefully you can get a feel for what I'm trying to do on this bit here. Let's carry on further then. So it says the garage unit is considered a business asset and therefore subject to conditions. Rollover relief may be available. Okay, fine. So the gist again of this paragraph is completely right in terms of the message that wants to be said. But I think again it can be simplified to make it easier for the client to understand. So do they need to know that it's a business asset, or do they just need to know that if if they sell the garage, then they might be able to not pay capital gains tax right now in the current tax year, and they'll pay it in a future tax year? You are saying pretty much the same thing, but you're removing the term rollover relief and some of this complicated language that's being used. So what you could say is doing this is as a consequence of rollover relief, something like that. So they still know that that's what it is. But I would flip the script a bit. Start off by talking about like what the impact is before using like the term that describes what it is. I think that would have a better flow to it and be easy for the client to understand. So it says this relief, so rollover relief, allows for the deferral of a capital gain where the proceeds are reinvested into qualifying business assets. Okay, so can we say what's said here in lesser and simpler words? I think we can say something like, um, when the garage unit is sold, you won't have to pay capital gains tax in the year you sell it if you end up using the sale, uh, the money you get from the sale and reinvest it into a qualifying business asset, something like that. Hopefully, you think that is simpler, but saying the same thing, and then we could say something like, "This is you can do this under what's known as rollover relief," or something like that, as long as certain conditions are met. Same thing is being said, but personally, I think that would be a simpler way to frame it to the client, and the client will appreciate it being framed in that simpler way. The replacement asset must be acquired within a 4-year window, beginning 12 months before and ending 3 years after the disposal of the original asset. Qualifying assets include land and buildings used for trading purposes, as well as fixed plant and machinery not forming part of a building. Okay. So again, everything that's been said here is fine. But what I might say is something like, if you do want to reinvest the proceeds, then we can talk about how you can make it qualifying or something like that. And then we can cut out the jargon. Or before writing this again, we can talk to them and be like, if you did sell it, what would you do with that money? Would you want to reinvest it potentially? Would you not? So they can get more information and therefore make this report close to the final version without needing to amend it later after the client's looked at it. So I think this continues now to do with rollover relief. So to qualify, the new asset must be, yeah, so this is further information about it. So what we can do then is we can cut out like potentially a full paragraph or shorten it by the length of a full paragraph, which would be appreciated a lot by the client. So I think I've already kind of said this in simpler words in terms of how I would change this a bit. Because if rollover relief is claimed successfully and the gain deferred, this deferred gain will not crystallize if the client dies holding the replacement asset. Oh, okay, no, I didn't know that, and I didn't comment on it earlier. Okay, so now we're moving on to something separate, which is business asset disposal relief. So what they've said here, in some cases, business asset disposal relief (BADR) could provide a reduced CGT rate, currently 14%, subject to a lifetime limit of £1 million on qualifying disposals. The current higher rate for CGT is 24%. Okay, so again, could we simplify this sentence or this bit here to say something to the client that means the same thing to them, but doesn't include the jargon? Could we say something like, in some cases, you could pay less capital gains tax on the sale as long as it qualifies for something called business asset disposal relief? Would that work and would it be simpler? I mean, face value, I would say yes, but let's continue reading. So, however, under our current understanding, the business will continue after the disposal, albeit on a smaller scale, and therefore the necessary condition of a material withdrawal from the business would not be met. As such, a bad off claim would not be available at this stage. Okay, so let's simplify this full paragraph then, because I think we can at this point. So essentially, what we can say is there is an opportunity to pay less capital gains tax on the sale of this asset, but because you're currently planning to continue the trade, it wouldn't be available. So we've not talked about it further. If that changes, let us know. Something like that. And I think then we're going to significantly simplify that paragraph. But we've let the client know that we've thought about it and there is an opportunity there then. So I think that would probably suffice in this case. The only other thought I had around this is, could there be some rough calculations done to figure out like what the cash benefit to the client would be if it did qualify for BADR? Because I suspect the reason that they're not just going into full retirement right now and they're continuing the trade is because they don't feel like they have enough money for retirement. So they want to work for an extra few years to get that extra money before they do fully retire. And if the tax saving from getting BADR is something like, I don't know, let's just say it's £200,000, and that's more than enough to stop them having to continue the trade. then clearly it seems like it's worthwhile to just stop working, stop the business right now and get that extra 200k. But if that 200k isn't enough, then it makes sense for them to continue. So this is where I think having some level of calculations, even if it's estimates and not accurate at this point, will help make decisions and help the client come to a full answer. Someone's asked me, would you agree to put the BADR before rollover relief? Um, I think in this case, Joanna, I would say no. And the reason I say no is under under the current fact side that the business is going to continue, BADR actually doesn't apply, but rollover relief can apply in the current circumstances. If if the client was open to stopping the business, so stopping the trade, then I would probably put it above because it's more important at that point. But in the way it is with the facts we've got, no, I'd leave it in the order that it's currently in. Okay, so this is the bit that they highlighted anyway. So they said, should the business later cease entirely and the trade continue under one partner as a sole trader, there may be scope to revisit eligibility. However, where HMRC considers the new trade to be a continuation of the same business, they may challenge any bad R claim on the grounds that it has not been a genuine cessation or material withdrawal. Okay, so what I would probably say here then is it's a hard one, this one, because I get what you're trying to do. It's quite complicated right now, and there's a lot of ifs and buts, and they may challenge, etc., which is going to leave the clients kind of in an uncertain position. I think what I'd probably say is we've already talked about like if they do want to seize it, then bad R could apply. So we've already kind of covered that bit. I think then what I would say is something to the effect of there is a potential to split the partnership into, well, actually, is that what's being said? And the trade, I'm going to reread this. Give me 1 second. And the trade continue under one partner as a sole trader. Okay, so that is actually what's going to happen. I believe actually the partnership is already going to split into basically a sole trader, and the sole trader is going to continue this trade. Okay, I think this needs to be probably considered in a bit more detail. It at this point, I don't know the technical, so can we get to a definitive position on the technical? Yes or no? So, what does HMRC guidance say around this? So, presumably, this person has looked and considered that it's grey and that they might challenge it. So, what I would probably do at this point is look at the legislation for sure, have a look at that against the HMRC guidance, look at some commentary around it, and see whether we can come to a definitive answer around this because it feels like a big point. The only other thing I thought when I was reading this earlier is there a potential, and this might be well off the mark, but it's just one of the things we do when we're thinking about like options for clients. Is it possible to split the business right now from a partnership into two sole trader businesses? The husband currently owns the unit, I believe. The wife doesn't. Could they do that? So then they've got two sole trader businesses. Could they then transfer, could the husband transfer half of the property ownership to the partner or to the wife, assuming that they're spouses? I think that would be a tax-free transfer for capital gain. And then could they both sell their respective parts and therefore get the capital gains tax allowance 2 times and get the lower rate 2 times? I don't know whether that's possible, but it'd be something that I'd be thinking about at this point. And it might seem a bit convoluted, but it would also save them tax if that works, I assume. That's something that could be thought about if it hasn't already been thought about yet. I've just seen that I've got a comment coming from the person that sent me this. So let me see if it adds anything. So it said it's not known at this point whether the partnership will cease. They haven't decided. Oh, okay, fine. We don't know at this point. I'd probably mention this just then very briefly in that there is a potential to end the partnership and go as a sole trader, which could open up the opportunity to get a bad R claim. They could potentially go to HMRC to ask whether it would qualify or not. And they could also consider the thing that I've just talked about as well to see if that's a potential. So what they've then said is this potential restructuring has not been explored in detail at this stage due to the intention for the partnership to continue trading from a smaller premises. However, we'd be happy to, yeah, so that's fine. I think that comment in itself is fine. So we've got about 4 minutes before I want to end going through this scenario, and then we'll almost pretty much straight away move on to onto questions for people who have got some. So what I thought I'd do just to kind of finish this bit off is just give my feedback of what I think is good and what I think are the improvement areas. So at this point, I don't think any of these will come as a surprise. So I do love that there's the non-tax bit that's considered at the start because as tax advisors, we do get bogged down with the tax, but that's not all the client cares about. So I do like that they've done that a lot at the start. I also like that they've clearly given a lot of thought to the different options available and what the different tax implications to that are, etc. That is like the perfect way to deal with a situation like this, and they've done it well. So they have given advice to improve the tax position. So we didn't get to that bit actually, but they have given it here. And they've talked about the BADR, for example, as a potential. They talked about the rollover release of potential. They have mentioned things that can improve the tax position for the client, so that's good too. I think the structure is good, and I do think that it's well written, in my opinion. So these are the areas where I think it could be improved based on what I've seen. So there's quite a lot of what I would call conditional wording. Um, and I think that's been used where the answer is actually definitive. So they've used words like this is likely the outcome or this may be the case. Well, can we be more definitive? Can we drop those words? And if not, can we say like why we can't drop those words? Why it's a may and why it's a likely rather than it is that, if that makes sense. And I do wonder right now whether the use of the words likely and may are actually giving the wrong impression because maybe they are definitive. So it's just something to bear in mind and be careful about. It's better first off to be definitive where possible. And where we're not definitive, we need to be sure that we can't be definitive, basically. Otherwise, it'll give the wrong impression to the client. There is quite a lot of jargon used throughout, and I get why that's snuck in because this is a complicated area. But I would keep it to what the client actually needs to know in simple language. So I've given a few examples of that throughout, and hopefully see how that would improve the advice from the perspective of the client without losing the meaning of what's being said. What I would do as well is I would add in numbers to exemplify what's been said. So take actual numbers or estimate numbers to put in some calculations here to give the client a tangible feel for what the impact of some of these things are. Because right now it's quite arbitrary. It's explained to them in words, but they don't really know like how much of a tax impact that's going to have on them or how much money it's going to cost them, etc., etc. So I would bring in numbers to bring it to life a bit more. And that's if it's not been done already. There could be appendices somewhere. I've obviously only got a snippet of the report, so some of these things I'm saying could be redundant, but based on what I've got anyway, this is what I'm thinking. And also, because there are numerous options, I do wonder whether we can bring in some comparison calculations as well to show them the different tax impacts of different things. So we've got like option A, B, and C. I think we've just looked at option C, but even in those options, there's options. So I do think there needs to be some level of comparison calculations to make it more tangible to the client. Okay, so that brings us to the end of that bit of the session. So if you've got any questions now, it doesn't have to be specifically on this scenario. It could be just related to tax advice more generally and what to provide that is good or how to improve things, etc. So feel free to add some of those into the chat now. I'm just going to have a quick segue over before we do that, though. So what we have just gone through. Oh, that should have stopped sharing the screen now. That's good. Um, So what we have just gone through is my thinking and feedback in relation to a small segment of what is real drafted tax advice by one of you that's attended today. But how do you go from start all the way to producing excellent tax advice, regardless of scenario, but always with confidence? Well, that's exactly what I teach in the tax advice masterclass. In the masterclass, I'll show you how to figure out what the advice should be, and then how to turn this advice into clear, commercial, and tailored advice that fits the client situation and gives them definitive advice, even when the tax position isn't clear cut. You'll learn how to draft great tax advice efficiently and how to write reports that are easy for your colleagues to review and finalise, and how to write reports that clients genuinely value. You'll stop overthinking, reduce how often colleagues make major changes to your drafts, and feel confident that what you're producing is high quality advice. A recent attendee actually said to me that they no longer fear advisory work and that she found the course extremely useful. A head of tax said, I have noticed a big difference in my colleagues' confidence, and the advice they are providing is a lot more tailored and more focused on what the client needs to know. Overall, a great course that adds value. So you might think that as long as your advice is technically correct, that makes it good advice. Being correct is obviously essential for it to be good, but hopefully after today you've seen that it's not the only bit that makes tax advice great, because you also need to be able to communicate it in a way that the client understands. because it's not just about what you say, but it's also about how you say it and the order that you say it in. And experience alone won't teach you that skill, but the masterclass will. And it's a streamlined way to develop your advisory skills and put them into practice. So what you can do is you can go to the taxprofessionalspodcast.com/TAM to get further details and to join the tax advice masterclass. I'll put a link, this link into the chat in just a second. But none of us, I do truly believe this, that none of us are born as great tax advisors. I believe that we become them. And I believe that one of the best ways to do this is to learn from someone who's had to learn it themselves. Take it from me that my advice used to be far too technical, and it even led to a client complaint one time. But now I'm often complimented by clients for how clear and practical my advice is. So if you would like to learn this skill for yourself, the Tax Advice Masterclass is a great way for you to do this. So that link is just in the chat now in case you want to take a look at it and are interested potentially in the masterclass. So, do people want to send in their questions and know based on anything we talked about today or advice more generally? And I'd be happy to answer them. We'll stay around for about another 15 minutes or so, to the extent that we've got enough questions, of course, to do that. I think what I'm going to do as well, actually, is I'm going to allow you to unmute yourselves if you want to talk to me instead of type it. Let's give that a go. So you can unmute yourselves now if you want to.
Hi, just wanted to say thank you. I found this class very useful, and I'm really looking forward to the tax advice masterclass. I personally felt like the last masterclass I have attended, I have started using that in practice, and it's been tremendously helpful to kind of, know where to start and like follow all the steps the way you did. And I haven't had like some of the things like my own directory or my own kind of portfolio of the really difficult topics. So really useful. I have started to create my own Excel sheet where I'm just collecting all the material, so not to spend extra time again. So really looking forward to the next class.
Thank you, Sadia. I do appreciate that a lot. So, Sadia joined the tax research masterclass that we just finished,
Yes,
didn't you?
yes.
Yeah. They're quite complementary, actually, both of these. So I think it'll help you take the advice element up to the next level as well. So no, thank you for that.
Yeah. And from today's class, I think it was for me, I wouldn't have picked up the points you picked up, like in terms of like what could have been changed. So it's completely different to how I have reviewed or updated this type of advice. So I think I got a different perspective to review something when I need to look at like I would have maybe accepted it. It's okay. These jog runs are like everyone knows these. So
Yeah.
I think I think we get used to it, like so used to saying in day-to-day life that we forget that our client might find it very difficult.
Yeah, no, agreed. It's what I've started calling the curse of knowledge. Because you know something, you forget that other people don't know it or might find it
Yeah,
difficult to understand. I think in this case in particular, this person owns what I believe is a car garage. And that makes me think that this person's probably not the most academic of people. I'm not saying they're not smart, but I'm saying not academic. And writing something that's complicated in an academic way is not the best way to communicate with that person. I would,
absolutely.
I mean, just as an overall comment, I still think this advice, by the way, even in its current form, is drafted overall well and it's good, but I think it can be elevated to be significantly better from the client standpoint. And I think that's, to be honest, it's something that not an awful lot of tax professionals actually do, even at senior levels, from what I've seen. But your clients will love you for it, and you'll reap the rewards from drafting advice that's much simpler for them to understand for sure.
I completely agree with you. After today's class, I was like, it looks simple, it looks okay when you first suggested, and then I got your point, not having a may. there because it's may or may not be. So thank you so much.
Yeah, no
Thank you.
problem. Thank you. Does anyone else have anything to add or any questions to ask before we shoot off?
Hi, Jay.
Hello?
Hi. I've just got a question for you. So I'm pretty good with numbers, but rubbish with writing, which I guess quite a lot of tax people are because they get sort of quite a numerical thing. And so I struggle with doing the advice stuff because it's just like I don't like writing English. I love doing the math side of things. And I'm starting to use sort of ChatGPT and stuff quite a lot for helping write things and simplify things. And I was just wondering whether you've got any experience with that or whether you have any sort of tips or advice around that. Because obviously, I know ChatGPT can get it wrong quite a lot of the time. But if you get something that is, you get all the legislation and you know the facts, then using ChatGPT to get it in a language that is more suitable for the client, I sometimes find can be quite useful.
Yeah, no, I 100% agree. I've started playing with this more recently as well. Actually, not with tax advice, but with improving something that I've written. So I think what I would do if I wanted to use ChatGPT with this is I would first off draft something like a super rough draft and just make sure that what is being said is right. Don't worry about how complicated it is and simplifying, etc. Just get something down, something written. And then what I'd probably do is put that into ChatGPT and say, can you remove the jargon? Can you simplify this to make it easy for a client that has no understanding of tax to understand something like that? Then obviously it'll come something back and it won't be perfect first, and you can go through some iterations then. But what I found when I've done that for just things more generally with writing is that it stops me procrastinating so much on the first draft. So I get like the first draft done quicker, even if it's like an awful first draft. But then found out that to get to the end, it's significantly quicker then to like rewrite it, let's say. And actually, probably the version that I've ended up with is better than what I would have done without the use of ChatGPT. But what I wouldn't do is say something like just draft the advice for me, because I think that's just going to be such a what it's going to produce is going to be so far off what you need at that point. It's probably not going to be worth it. So I don't know if that's what you've been doing as well, Dan. But that's the way I've been using it for similar things.
Yeah, I kind of do a sort of a bit of both because when you're trying to work out the technical side of things, it's actually quite good at like finding the legislation because I know like some things I know there is legislation, but I just can't remember the section numbers. And it's quite good when you say, "Oh, I know something about, business asset disposal relief. Can you just find the legislation?" And then it's quite good at pointing you in the right direction. And you can kind of build up a picture of the sort of the facts and the stuff, and then you get to a because he gets it wrong some of the time, it points you in the wrong direction. But as long as you kind of know a bit about what you're doing, you can get to a point where you've kind of got the factual side. And then I think it's very good at once you've got all those facts and it knows them, then summarising them and putting them in a digestible format that presents well. Because that's what I find really difficult. It's doing the English side of things because I'm just not my natural strength. So I think it's a learning experience, and ChatGPT and AI is going to get better as we go, but yeah, it's definitely something I'm finding I'm using more and more.
Yeah, no, no, same. I've been doing it for similar things as you as well, and as you know already, Dan, I love legislation, but I've even started using it now to like start me off to get me to the right point. I don't use it to interpret it and apply it for me. I use it a lot now to find the section number for me or the
Yeah.
HMRC guidance that's related to it, etc. as well. Yeah, it's a really useful tool, isn't it? I think I need to do something specifically on using AI in tax, so I can obviously then share like what I'm doing and how I'm using it what other people are doing as well, because I definitely think could be utilizing it a lot more. And I'm somewhat slow to the party, I suppose, with that, which is surprising because I used to love tech as a kid, and both my dad and brother work in IT, so really I should be like almost at the forefront of using it and applying it. But I've almost got stuck in my ways a little bit as well. But I have liked what I'm using on it so far. Yeah, it's got loads of useful application for tax for sure. And it doesn't need to be a tax specific tool like Copilot or ChatGPT, as we've talked about. Like they're completely fine and they have to be used with caution for sure. But they are definitely like really helpful tools now to get things to like the end point.
Great.
But I've just seen someone put something in the chat. So they've said no question, just a comment really. Really like what you're doing. A consistent feedback point to grads, analysts, managers, senior managers I work with is to write the advice in plain English. Easy to say, very difficult to do. Yeah, no, agreed. It is difficult to do. I think you have to go through. So when you learn a language, so I found this out probably about 2 years ago. When kids learn language, they go through like different stages of what they can say and how coherent it is and how close it is to proper English. And I think when it comes to like learning how to write plain English tax advice, you have to go through the same stages. Like the first stage is you need to learn what the correct answer is. Like full stop, before even writing any advice, what is the correct answer? That is the first bit, and you have to learn that. I then think the second bit is to articulate that in some way, whether it's technical, whether it's poorly written, doesn't really matter, but you got to learn how to do that next, I think. And only once you've done that can you then learn to simplify, I think. So you do be patient with yourself and give yourself time to go through like the different stages. But it is doable. It will take a long time. You've got to bear in mind now that I've been working in tax for 10 years and I'm someone that's spent a lot of time trying to get better at this because I'm very particular, as you can probably tell, and a bit of a perfectionist. So I've spent an awful lot of time to get to where I am today. But even over the last like year or so, I've seen a huge improvement in how I simplify advice as well. So it wouldn't have been as simple as like a year ago. It wouldn't have been as simple as what it is now. I'll just finish reading the comment. You said, I think the old guard, I mean that as respectfully as possible in the industry, set a culture that encourages us to show off the technical knowledge we have in every piece of advice we deliver. After 25-page report, I absolutely 100% agree with that. I think go back like 10, 15 years, that type of technical advice would have been like the holy grail. But I don't think we're in that world anymore for sure. And he just said, non-tax experts simply require concise headlines with an option to read the supporting technical detail. Yeah, 100% agree. You're absolutely spot on with what you've said.
If I, Jack, it was me who put that comment. I was just going to add something that a partner taught me many years ago, which I find very helpful. And it's going to sound a bit strange, but he said, "Have you ever read a Daily Mail article?" And I was like, "What are you talking about?" And he said that what the Daily Mail article will typically do is it will bullet point 6 or 7 points that will give you the whole sort of summary of the article. And then it will have all of the sort of thick prose, if you like, just the writing underneath it. And so you can get a quick summary and then you give the reader the option to go and read the full article. And he said, apply that to your tax advice. And I find that that makes a world of difference to clients if you can give that sort of. He's always encouraging me to think about the executive summary if you're doing a report is where you need to get everything across about here's the relevant issue, here's what your options are, and then you can give all of the other technical stuff, but essentially say, look, go and read that if you need to. Whereas previously it was sort of you'd write down all of your explanation and then the client would have to read 10 pages to actually work out what you're advising,
Yeah,
if you see what I mean.
yeah, no, for sure. Executive summaries are really useful because they have to give the headlines, but there's usually for the people who are curious about like the whys or the whats, etc. It's not there, is it? And you
No,
can
no,
put that
no,
extra
no.
detail into the report. I still think the extra detail can probably be simplified by a lot of people, though, in like the type of language that we've talked about today.
Agreed.
And then if you really do need to put more technical in, I always suggest doing it in an appendix
Yeah, yeah,
instead.
agreed.
Take it out of the body of the report, and it's there then for the odd unusual person, so we say as a client that actually wants to see that and it's helpful. We should have on file though, we should have something that is that technical that backs up the advice. But in most cases, I think it's not the right thing to do to send it to the client. But obviously it depends on the actual client, circumstances, so on and so forth. Lovely. That actually takes us to 45 minutes. So I'm going to call it a day there. A few people have asked me about recordings, and I wasn't sure whether I was going to send it around or not. What I'm going to do is I'm going to make it available for about 7 days or something like that. What I want people to do who attended today and want to rewatch it or who couldn't attend is learn this like now, like have a bit of urgency around it, and then we can move on to the next tax lab session in the future. So I'm going to do another one anyway in about 2 weeks' time, I think, also on tax advice. Oh, someone's got a quick question. Do I have rough dates for 2026 masterclasses? I actually don't yet, Joanna, but I think you're on my email list, so you'll definitely see when they're out. Likely to have the tax research one in February, I think, but undecided yet. But no, lovely. Thank you all for joining. I do really appreciate it, and I do hope you found the first session useful. It went well. I feel like it went quite well, but you're going to be the judges of that, I'm sure. So anything at all that you leave me with, like, really appreciate it, and thank you all.